Good afternoon, everyone, and welcome to the Daily Volatility Box Review for October 21st, 2019. We are TOSindicators.com, home of the Volatility Box. Over the weekend, we sent out a note to all members that we had added one more futures ticker to our Volatility Box. And if you're already a member of the Volatility Box, this was added to your account, to your indicator downloads section free of charge. So just keep an eye out for it. So the copper futures are something that we're starting to study now. They've shown to have a little bit more volatility, especially on days like today where we had no trades in the actual volatility box. The copper futures, while we didn't have trades there, were more volatile. And so I think on days where we might get a little bit closer to having slightly more volatility action in the markets, copper might trigger an entry, whereas the regular markets may not have. But again, that's very much just a market that we're starting to study and observe. If you are already a member, this should be added into your account. If you don't already see it, just send us an email and we'll send you a copy of the file. Okay, and then one more thing for Volatility Box members only. We've had a couple members email us, so I'm just making a note so everyone can verify. In your code header for both your aggressive and conservative Volatility Box, it should say 1020 to 1027 for the week that this is valid. Just make sure that your indicator says this and that you have the latest version installed in your Thinkorswim, because we've had a couple instances now of where the caching has messed up the downloads for a few folks where they have previous week's indicator still. So just double check that you have the right dates in your header. Most of our users haven't had a problem with this, but we have had a few instances, so you may want to verify your indicator file. The second option, and this is something that we just learned today, Dick, if you're listening, thanks for pointing this out. It's if you have the extended hours turned off and the volatility box plotted, you'll want to make sure that the start aggregations at market open option is checked off. We'll show you where to do this in your Thinkorswim just to verify that you have the right settings. But this otherwise would mess up the way the volatility box is supposed to display. So these are just two reminders to check on your indicator file. All right, now moving along for tomorrow on our scheduled events for the calendar, this is the big event that I see that I think is going to move markets. Last time we had Brexit events or the Brexit news, that required us to be on the conservative volatility box. So just keep that in mind. Right now we have this as tentative, so whenever this updates, for whatever time this event is, I'll be on the conservative volatility box trying to play any fades of the news at least that comes out, any headlines out of the Brexit vote. And for upcoming earnings tomorrow, we have quite a few plays, so you can go ahead and pause the screen here if you'd like to take a screenshot of this. This will also be available on our website, but I'll point out a few that I'm looking at in particular. So we have Procter & Gamble, and we also have asterisks here. And so this is just something that I've started to observe, which is if you have the asterisks, then for these particular moves, I prefer if we have a greater than expected move. And when I say greater than expected move, this is using our calculations. So I'll show you on the charts in just a second, but with Procter & Gamble, we'll see what the actual number is that I'd like to see us gap up above for this condition to be considered true. And you would know that as soon as we have the open or data after the earnings play. But for Procter & Gamble, I'm looking for gap and goes either in the bullish or bearish conditions, but only if we have the logical earnings play with it. So that's if we gap up and we've beaten earnings, or if we gap down and actuals were less than estimates. And we see we have relatively nice low and average moves. The bullish condition tends to, on average, give us a little bit higher of a bullish move versus the bearish. However, both plays give us a nice healthy move in Procter & Gamble. The next play is in UPS, so very similar. We're looking for a greater than expected move with the same sort of scenario if we gap up on a beat or if we gap down on a miss. And the numbers again in UPS a little bit different, but you can go ahead and pause it or print out the screenshot. $2.50 for the lowest move if we have a gap up and then we continue going, or $1.15 if we gap down and then continue going in that direction. But our averages are closer to the $3 mark, $3.38 and $3.74. And then the last one is Lockheed Martin. And in the case of Lockheed Martin, we're looking for less than an expected move. And if that happens, then we're looking for Lockheed Martin to fill that gap in a bearish direction. So we're looking for a gap up and then for Lockheed Martin to fill that gap. And again, the gap needs to be a sizable enough gap that it's worth playing. So we'll take a look just at the UPS play and then look at the charts. Okay, so first for members, if you wanted to double check those settings, So the way to check that, first off, to check the code header, it would be to come into your studies icon tab, load up the volatility box, and the very first two lines will be where the code header is. And so this is where you can see volatility box for 1020 to 1027, and this is what your file should say. And then for that second setting, for where we have the start aggregations and market open, and once you click the settings tab under futures, we always tend to have show extended hours, but say you have this option turned off, if you have something like the supply demand edge on, then we'll want to make sure that this option is turned off, start aggregations and market open. And so if we turn it on, then that's not even an option. It's only if extended hours are turned off, then you have the option to start aggregations. Make sure this is turned off. Okay, and those are the two settings. Now let's take a look at UPS. So we were talking about the expected moves. And so in the case of UPS, when we're looking for a greater than expected move, we see that for this earnings period, according to our indicators calculation, we have an expected move of $5.57. And so for tomorrow's open, we want the open to be at least $5.57 above the close from today, the day before's earnings, especially since we report before market. And so we will take the close, which in this case is 118.52, and we'll go ahead and add $5.57 to it. And so our open for tomorrow has to be greater than $124.09 for that preference condition to be true. Now, if you look at the actual statistics, you'll see that a gap and go tends to work more times than not. But if we zoom out now, on the chart on UPS, just to show you how we read it, and this is a 2-year chart just to clarify, we have these bubbles plotted only where the condition is true, where we had a greater than expected move up, and we can see what happened. So here we had a greater than expected move with the gap and go bullish. We opened here and we had a really nice move up higher. Here we had a greater than expected move, and in the bearish direction, again, opened here, closed way below, nice move lower. No expected move higher. You'll see that you'll see only when the condition is true do these green bubbles pop up. Here we'll see that we had a greater than expected move, and we did have a flush down, and this is where our lowest bearish condition comes in from, $1.15, before we then reversed and ended up essentially having a doji type candle. But we can see the power of having these labels plot only when needed to be true. And so we did those calculations, 124.09. If we gap up, that's what I want the open to be above. And if we gap down, then we want it to be the same price but lower, $5.50 from the close, and that's the condition which then makes that to be true. And if we look at Procter & Gamble as well, so on Procter & Gamble's case, we can see that we have an expected move of $4.14. And so we're going to use the close, 119.08, add and subtract $4.14 to it. And so that essentially gives us a range of $123.22 to the upper side that we need to open above. And then to the lower side, we'd like to see it open below $114.94 for those conditions to be true where we have a greater than expected move. And so hopefully this gives you an idea of how you can start to use these bubbles. They let you go back and very quickly see whenever these conditions were true, and this is why color coding everything works, right? Our lime green points only to whenever we have an actual move that's greater than the expected move. Our cyan bubbles only plot whenever we have gap fills, which in this case we see we very clearly don't. And our gap and goes plot yellow only when we have gap and goes, and they tell you on the bubbles whether it's bullish or bearish. And this is how we're looking at the earnings season. For all the symbols that are on this table right here, you can go ahead and repeat the same sort of process, start to observe other expected moves that you might want to make note of, copy this into maybe your own Excel table, and then this becomes a printout sheet that you have ready to go to play each morning's earnings and see if any of these conditions come true. You can also use the conditional orders in Thinkorswim, I believe, to write your own study, and it's definitely worth trying this out in paper money first, but you might have a conditional study in which it's linked to, say, the open price, and you might say if the open is greater than X, then buy 100 shares or buy X option, and then if it's less than this, then go ahead and do the reverse, right? These are all things that are possible in Thinkorswim, worth playing around in paper money first because they are a little finicky, but it does start to help you automate some portion of your earnings and just play the odds as opposed to trying to look at each chart and then make the decision game time. You already have these conditions programmatically installed, where at least you might even get an alert that says, yes, these conditions are true, focus here. If there's enough interest, we might do a ThinkScript episode showing you how to do just that. All right, so for tomorrow, again, just keep an eye out for that Brexit vote. That's the news that I think might move us. And so that's where we'd like to be on the conservative volatility box. But apart from that, again, be using that same hour test, and we'll see how tomorrow's markets treat us. All right, take care, everyone. Hope you have a good night.